There we go. This is called my vapor fib. The vapor fib doesn't really have any relevance in the sense of, does it mean anything in particular? I just call it vapor fib because the colors that I like to use, I like vapor waves, I like synth wave, things like that. So if you hear me reference to vapor wave, this is essentially what I'm talking about. These settings is going to be my default settings, right? If I'm measuring an entire structure of something, or if I'm measuring a leg, let's say I'm trying to identify a harmonic, I'll use this. This is essentially my default settings. So I'll put this inside the chat for you guys. I have a breakout on how I use certain fibs, and I'll make sure that you guys do get a copy of what these fibs look like for all the different things that I use them for. I have a nice long thread that's for them, and I'll make sure I post that for you guys after the class. But take a screenshot. This is essentially what I'm using and what I'm utilizing. The first thing that I like to do, like I said, I like to go on a higher time frame. And the biggest thing that I see a lot of pitfalls when it comes to people utilizing fib levels is they just inaccurately place the fib levels in the wrong spot. Right? Maybe they don't have a particular swing point. So sometimes they may be off on a fib level and things of that nature. And one thing that you should do some research on when it comes to Fibonacci. Fibonacci, it's mathematics. It's 1 plus 1 is 2, then 2 plus 1 is 3, then 3 plus 2 is 5, 5 plus 3 is 8, and it just goes so forth and so on. It's a very long number. And so when you're utilizing these, you want to make sure you have the right measurements at the right spot. That's why I say when it comes to pitfalls, or at least things that people commonly make a mistake on, including myself, is maybe they nudge their fib level, right? They don't get the right swing point. So for this example, what I'm showing you right now is essentially the most recent swing points that we've had, right? From our all-time high down to our bear market low. You can measure that structure because look, it made an all-time high. So this changed the structure, and everything to the right of that is going to fall within that structure. That's one way that you can utilize it, because this is going to be considered an internal structure. So anything inside here is considered internal structure. So you're trying to identify support levels and resistance levels in between. You can take it a step further, and I do this sometimes when I'm just looking at the entire picture, is I'll move this over to all-time low. All-time low is 81.79. So you just double click on your fib, go to your coordinates, see this bottom right here, 81.79. I'm just changing that around, right? And this essentially is going to be considered your historical fib. It's the entire asset. That's important because those levels have been either tested, broken, what have you. It's important at least to identify that. And there's going to be some key levels that we want to look for when we're looking for the strongest areas for support and the strongest areas for resistance. Essentially, when you're using a fib, and make it very easy, if I want to measure support, good way for you to identify that is make sure that your 0.5 is above your 0.618. If you want to measure support, all levels of support, right? I'm shorting, wherever I'm shorting from, whatever time frame I'm shorting from. I whip out a vapor fib and I start placing it from swing highs to swing lows, and I want to see where this short can come down to from to levels of support. Then I want to make sure that my 0.5 is above my 618, and vice versa. Let's say you're in a long and you say, hey, I got a bottom here. What are going to be my levels of resistance that I can run into? This is super easy. You don't have to move around the swing points. Just double click on it. It's going to open up for you. Go to style, just scroll down, and you see this little checkbox where it says reverse. Click on that. Now, your 618 is above your 0.5, and you're essentially measuring resistance. Different levels of resistance, right? From the bottom, it moved up 38%, it moved up 50%, it moved up 61%, it moved up 76%, 88%. So a move from the bottom, from the all-time low right here of 81.79, price has retraced from this high to here. It has retraced at least 76% of that. And it's pushing towards that 88%. And so I'm looking at levels of resistance here, and this is just going to give me the mathematics for it. What I'll sometimes like to do is just take a ray and just place your ray where I have some confluence. I look at the bodies, right? Because the 618 area is going to be it's going to be a strong area for resistance. It's not the strongest. It's just something that can't be ignored. That's essentially where I'm getting at. So there's a lot going on, and you can see on your chart here, or at least on the screen here, when price tried to push back up, it pushed through it for 1 week, 2 weeks, and then on the third week, just sunk back down. So this essentially played into a role of resistance here in this area. So I identify it. I'm going to mark it off on my chart. At least that's how I would be measuring resistance. And then I would do the same thing right over here, right above it, 0.76 area as well too. Look left. I try to find if there's a body or a wick that can give me some confluence here in this area. That's essentially what I'm looking for. I don't have much outside of that. So in this scenario, I'm going to move to the closest area, which is going to be right around here. So this kind of goes in with what I said earlier before. The fib levels are not going to be absolute. They're going to give you areas. And so in this area, right, it played a role as resistance, but not as much as like 618. There's a lot of activity here in this area. So now I'm looking at this 3738 area, and that's subsequently where we are now. We're floating around in those areas. Rule of thumb when it comes to using a fib level and using the 0.5. The 0.5, it's your 50% benchmark, right? It's the halfway mark from that move. So in this case, from this bottom of 81.79 all the way up to the all-time high, this is 50% of that move. My own rule is if price action is above that 0.5 level, it is bullish. If you flip this back over on its head, your 0.5 won't move. Everything else will move, but your 0.5 will be still in the middle. So that will always be constant. So in this scenario, if I was measuring support levels, then I wanted to see price bounce off of 0.5 and then go back up. It didn't do that. And we can see that's what happened during our bear market. We went sub 0.5. We went sub 618. We went all the way down to like 76, teetering right above 0.88 area, right? So essentially, whatever I'm measuring, whatever my position is, if I want to see, if I'm in let's call it a long, right? And I want price to move up and I'm sub 0.5, I need to break that 0.5 level, right? It's important that we break that level and then we continue to build upon that and go above that. That's important for continuation. If you run into a 0.5 level, let's say that you're long, and you hit that 0.5 area and it just then becomes a wall, then that's a clue for you to start stripping down some of your your long. It doesn't necessarily mean that you should enter into a short in that area because you may see a wick up and then it comes right back down. It's just a clue for you saying, okay, I'm running into a resistance wall right now. I need to start taking profits, or I need to start seeking out shorts and identifying where it can go into. There is what's called a golden pocket, and I'll get into that with you guys in just a moment. One thing I want to give you guys a heads up on is the extension of a fib. So you can see that we're measuring support here, but what if price just continued to go up? Where is there going to be a good resistance level in the sense of maxing out, right? How do I max this out mathematically? And so this is, if you go back to the settings that I showed you here, you can see that I have a negative 0.618. This essentially is your extension, expansion, or whatever it is that you want to label it. It's the same thing at the end of the day. And this is what I like to utilize on both sides of the coin when I'm looking for is saying, if I get invalidated in an area and price just continues to drop or continues to surge up, right, just blowing past all different levels of resistance, where can this thing fly to, right? So we have 0.25, negative 0.25 is essentially weak. It's not something that's ignored. It's more of a weaker level. But anything that has a 618 in front of it, whether it's a 1.618, 2.618, 3.618, negative 6.18, those are essentially strong areas. So I look at this saying, well, if we just surge throughout the course of the year or whatever the cycle may be, this is an area that's going to be tested. So, and to identify that, let's say what's going to be my top for this, you want to make sure that you're measuring support and then do vice versa. What could be my ultimate bottom? Now, in this case, since it's historical, it's going to give me a ridiculous number, which is not going to be accurate, right? We're not going to go to negative $287 or what is that? Yeah, 2,870. That's just not plausible. But if you're measuring different areas, different zones on internal structures, and I'll give you an example here, you can see that. So let's try that here. Let's measure right this most recent impulse that we got from right here. And when I say recent, I mean what began this bull run, if you will. So I'm just going to measure here and go to this top. What I'm doing, I'm zooming in because I have a lock on my keys, but I want to make sure that I get the right number. I don't want to be thrown off by a decimal here or there. It won't kill your position, but at the end of the day, like if you're running a high leverage like I do, I try to get as humanly possible my entry, so that way I know that, hey, I'm in a very strong position. I don't have anything to worry about. So in this particular case, I just measured this leg right here. Again, not plausible at all, but let's just go ahead and flip that on its head. That's very plausible, right? For this move right here, right? Because this is starting to create its own structure. Can it move to here? Yeah, it can. How long? We don't know that. There's different fibs for that. That's not what this class is about. But this is going to be an area of resistance, something that we should be looking at. And there's nothing, when we look left, there's nothing to compare it to. So essentially, you'd be in a price discovery mode, and you'd say, okay, what price go to? I don't know. It's in price discovery. Okay, so let's apply the mathematics to it. Mathematically, where can it go? It can go here. That's essentially what I'm trying to illustrate to you guys, is when you're measuring that support or resistance, where areas that it can go to support your thesis, right? So if you're bullish and you're extremely bullish, which I think a lot of us are, what are some levels that this thing can go to? Can it go to 7K? Yeah, it can. Can it go to 5,600? Yes, it can. So again, this is weekly. This is how I start off with weekly, and I start measuring from there. This is historical. One thing that I like to do when I'm charting my levels, just so it doesn't become confusing, is label them. What purpose do they serve in whatever it is that you're trying to do? If you're, if you're harmonics or anything like that, purpose does that fib serve? Are you measuring a leg? Are you measuring a 0.5? What is it that you're doing? One thing that you can do is when you do create your fibs, if you open up here and you see this little boxes, you can create a template for it. That's kind of what I have here, all these different templates. So this way I don't have to memorize what are the fib levels for whatever it is that I'm measuring. They're already done and they're already pre-templated for me. So if I know, hey, I'm measuring a wave 3, a wave 4, a wave 5, because I'm doing Elliott waves, then I already have them set up for me, and all I have to do is click. That's really, at the end of the day, what you want to do, because you want to be efficient with your trading. You want to be fast and effective, not sitting there trying to figure out which level it is for every single type of fib that you're using. One thing that I like to do when I'm measuring, again, this is like default fibs. So let's say I'm measuring now, again, I'm on a weekly. And in my case, I'm saying, okay, I want to see a retracement, right? The week is, I'm 5 days into this week. I don't know where this thing's going to top out, but I want to see some type of retracement. What's going to be a good area for me to go and test? And this is where I would pick a 0.5, just take 0.5, and let's zoom in on that a little bit. This candle's still going, it's 5 days in it, but I'm just giving you this as an example, because remember what I said before, if price is above the 0.5, then it's bullish. If it's beneath, then it's bearish. So if I saw a retracement to 3441.84 and it bounced from there, then it's bullish. And all essentially price action did is just retrace 50% of this candle. So this is another way for you to identify support on a more minute level, if you will, right? If I want to measure a specific candle, then I just kind of if there's any confluence here in this area, which I don't have much confluence here. If I look at this structure, do I have any confluence here inside of this structure? No, I don't. So I'm kind of in no man's land in between here, which is good because it puts you into an area where you can have a strong bounce and you can move forward and up from there. Excuse me. Let's take that off. Let's go down to some lower time frames. I'm going to take these off. Actually, I could leave those on. That's fine. I can leave this off. Let's go down to like a daily. And so things don't get confusing. What I'll do is for this historical fib, I'll just change colors of it. Let's just change it to yellow so I know which one is which when I'm looking at it on the chart. Okay. I just measured this entire move right here. What I'm going to do is I'm going to move this over to the left just so these don't confuse me. And some things that you can do, what I like to do just from a keeping things organized so I don't get confused, is I'll take these off Those are essentially your 0 and your 1 are your swing points where you measured from. But if you know you're going to be using all this other stuff that's on here, like this negative 618, I'm not going to use that. At least not now. This 3.618, I'm not going to use that. Like, I'm not utilizing any of that. So I'll just take some of that extra noise off so that way it doesn't get confusing on when I'm trying to map out different levels. In this case, you can see here there was a swing high and then we had a swing low. Remember, this is all inside the structure. This is our high, this is our all-time low. So all of this is still inside the structure. So when you hear me say internal structure, right, that anything can really happen, right? It's a big giant range. Is the best way for you to view it, if you will. So in this case, what I'm doing here is I want to measure resistance. I'm going to take a fib. I'll put my vapor fib on and go from this high down to this low right here. I'll move it over and let's flip it on its head. So right now we're running into a, I couldn't do that twice if you paid me. Huh. I posted inside of the challenge that there was a sell side liquidity pool sitting right around 39.30 through 39.45. And subsequently, there is a 0.88 fib at 39.33. So, segue, but what I'm getting at is like we start adding in different things. The fibs start adding as confluence, right? Things that are in common to your thesis. So if I have a 0.88 level and I'm measuring resistance and I also have a sell side liquidity pool in that area, then those are two things that work in my favor that say, okay, there's some resistance in that area. I think I'm going to go ahead and shorts in that area, if you will, which I adjusted some of my shorts for that area. So since I'm measuring resistance here, and I don't need this 0.0, I don't need 1. I do want the 618. I do want the 0.5. I don't want that. I'll keep the 0.76. I don't need that. I don't want that. I don't want that right now. And I'll keep this. 0.88, I'm going to color coordinate it so that way it stands out for me. This 0.5, I'll leave it the way it is. The 618, sure, we'll just change colors on that one too. Let's go with the purple. And these are just small things that I do so that way when I'm looking at, I know what I'm measuring, I know what areas I'm measuring. Sometimes it can get confusing. So you're highlighting points. So here it is. You can use a highlighter, right? And then you can do another one right over here and call that one my swing low. Try that again. There it is. So if you're charting or if you're explaining to somebody or whatever it may be, you can show them like these swing points that I'm measuring. Like this is what I'm measuring. This is what I'm using the fibs for to measure the levels. All right. Now I want to see the resistance, right? I want to see look left. Anytime I'm using a fib, I'm measuring support or I'm measuring resistance. Measure it out, measure your swing points, and then just like we did on these red dashed lines, you always look left. Okay, what comes into this area? All right, what do I have that lines up with this? Well, we came pretty close here. Bam. That's like on the nose, right on the button. Let's change that to yellow just so it doesn't confuse us. Look at that. So the likelihood of price coming and revisiting and testing a previous area of resistance where it also created a form of imbalance because price surged up, right? It surged up. We had a couple different types of candles. I won't go into the candle types here, but we had a couple of momentum in buy candles. We had a one last hoorah push up, and then we had started building some sell pressure right in here. Then once we got into the sell pressure right after this candle, boom, drop. And then we've moved sideways all the way through. So for us to come and retest this area mathematically just makes sense. Could it blow right past it? Yeah, of course it could. Right? You got a historical fib, or excuse me, you got this just entire impulse. It can go all the way up to 5,600. But a lot of us know that price just doesn't go up in one shot. There's going to take breathers. It's going to take breaks. And so this is where I would anticipate a break can happen. And then once the break happens from here, then I'll measure and start to look for support areas, support zones. Here you go. Sorry. There's the support that I'm talking about. I just put a line right over here. I'll redo that for you guys. This green line right here. So this was our move up, right? This is when we started impulsing. We started moving on up. Somebody may come over here and say, okay, what about this area? Yeah, you can measure that. But where does that take you? You can even move it over down to here. You can measure that. So let's say we were to break this trend line. Let's say price was just going to continue to drop down. Could this been a level of support? Yeah, it could have. But that's not our trend right now. our trend is not bearish. So for us to retrace all the way back down to like 1800s, 1700s, then essentially it's almost like an extended bear market. It doesn't make any logical sense at all. So I don't necessarily put any weight on this support line. What I'm trying to express to you guys is utilize the raise to find support and find resistance areas, find resistance trends that we could possibly be running into, right? So I would be looking at something like this for resistance. Here we go. In this swing, now I'm not going to measure here just yet. I'm looking at something like, okay, take off this magnet for a second. Go, something like that. So now you get into this wedge-like, or it's not a wedge, it's more of a symmetrical, right? It's a symmetrical created from the upside. So the likelihood of a breakout to the upside is greater than breaking down to the downside. But we'll talk more about chart patterns in one of our future. I actually think that's our next class, to be honest with you. So we'll discuss chart patterns, but what I'm looking at here is I'm really just looking at the resistance and I'm looking at the support level. And I'm speculating, of course, right? I'm speculating that we're going to come up to this 0.88 area. We're going to run into some resistance and we're just kind of fart around here in this area and then we'll have a breakout. We'll break out to the upside. But don't be afraid to put a couple different lines. Now, don't put a whole bunch of lines and then just leave them on there. In a folder. You won't see that here on this side, but I'll show you in an object tree. You see how unorganized this is? You may need to go back through some of your work and go, man, where was that fib that I was using? It kind of looked really well, or that idea that I was thinking. Make your object trees. It's really easy to do. You can just literally grab them, hit shift, whatever idea it is, and then put it into a folder, right? We just call it example, and we'll save that as example. But I'll give you a better idea as far as what it looks like for me on my index. This holds a lot of my ideas. If you're trading on Binance or trading on Phoenix or trading on any other exchange, I recommend having that as well too. But you can see like all my ideas, here, and then if you open them up, you can see what's inside there, what I'm tracking that's inside there, what fib level it represents, what TP levels are in there. Like this, all one idea. If this was my bearish thesis I've had before, some of them pan out, some of them don't. But the objective is to be organized so that way when certain levels are hit, whether it's a support level, whether it's a resistance level, whatever it may be that it is that you're charting, you can easily go back to it and not put yourself in a position where you change your bias. I see that happen all the time when people use fib levels and support levels, draw something new and they're like, oh shit, okay, the resistance area, right? And they completely forgot that they had an idea from weeks, months, maybe even years ago. Like what I just showed you now, some of those ideas in there are from like years ago, right? I have a Nenstar that's in there from 2.5 years ago. So some of these ideas just don't go away. The point is that so it's easy for you to go back to and retain that information and continue to start charting or whatever it is that you're doing and not change your bias. That happens over and over and over again to a lot of traders, and then they just end up giving up. They're like, I don't know what I'm doing. Well, you do know what you're doing. You have too many ideas, and it's important that you at least structure them in a way so that way you can go back to them. Not every idea is going to pan out, right? For example, I gave a bearish thesis last week stating, or at least of the idea saying, hey, if we lose 3,043, get real ugly. It was this idea right over here. It's pretty detailed. It has a bunch of fibs, have a bunch of levels. It has a couple harmonics that are inside there. Did it pan out? No, it didn't. But it damn sure is good to have in the event that it did pan out. I'm like, okay, I know where my next support level is going to be. I know where we're heading towards because the key component was 3,043. It was a support level that I was measuring it using fib levels. I was measuring it using previous data. All right. Anytime someone asks you what technical analysis is, at the end of the day, it's really just analyzing previous data. That's what it boils down to. It's just analyzing previous data. All right, guys. Thank you guys for coming on out. I don't want to go too much over. We're right on the button. Like I said, next week is going to be chart patterns. If there's any follow-up questions, feel free to put them in general chat or shoot me a DM. And then depending on whatever the question is, if it's something that needs to be a class, I'll turn it into a class. But if it's something that I can answer for you right then and there, I'll do my absolute best to answer for you at that time. I hope you guys have a fantastic remainder of your day. Be safe out there. Be smart. I'll catch you guys soon. Peace.